$1.14 trillion in 3 months. The mega deal is back. We haven't seen a first quarter like this since 2021.
Oh, come on. Deal volume is up, sure, but so is the friction. 2/3 of analysts are predicting a massive spike in courtroom drama this year.
Let them fight. More billable hours. You can't tell me Abbott dropping $23 billion on Exact Sciences isn't pure confidence.
Or pure desperation. Let's see if the regulators actually let them close it. The rundown. $1.14 trillion. That's the North American M&A volume for Q1.
Strongest first quarter since 2021. The mega merger is officially back, and my former colleagues in banking are currently shopping for boats.
Well, they better save some of those bonuses for legal fees. 2/3 of analysts are projecting a massive spike in M&A disputes this year. We're already seeing it with that Nexstar and Tegna deal. A judge just hit pause on the whole thing because DirecTV threw a fit and sued.
Standard corporate theater, but you can't ignore the actual closed deals. Google finally pushed through the $32 billion Wiz acquisition.
I'm still shocked that cleared. $32 billion for a cybersecurity firm when the regulatory environment is this hostile?
It's totally defensive. Google had to do it. They're bleeding cloud market share to Microsoft and AWS. Wiz was the only piece on the board big enough to change the narrative.
No, I completely disagree. It's not defensive, it's pure panic buying. You don't spend $32 billion defensively. You do it because your enterprise sales team is screaming that they're losing pitches.
Panic, defense, whatever you call it, it worked. And IBM is playing the exact same game. They just finalized their $11 billion buyout of Confluent.
See, that one actually makes sense to me. IBM buying a data streaming platform fits perfectly into their boring but highly profitable hybrid cloud strategy.
Boring is the new sexy, Maya. Speaking of sexy, how about Blackstone buying a cricket team?
I'm sorry, what?
You missed this? Blackstone and the Aditya Birla Group are scooping up the Royal Challengers Bengaluru franchise for $1.78 billion.
A private equity firm buying an Indian Premier League cricket team. That's certainly a choice. I guess sports multiples are just totally detached from reality now.
Hey, live sports are the last great unfragmented audience. $1.78 billion might look cheap in 5 years.
Okay, Mr. Big Picture. Let me bring you back down to earth. Public Storage is dropping $10.5 billion to acquire National Storage affiliates.
From cricket to self-storage, the duality of M&A?
Exactly. People always need a place to put their junk.
True, and speaking of places to put things, Citi's reportedly hunting for a regional bank to park some deposits. We'll be watching to see if they make an official move tomorrow.
We're also tracking Blackstone's late-stage talks for UK aerospace supplier Senior. But before we get to tomorrow's news, we need to talk about the absolute biggest deal of this $1.14 trillion quarter.
Oh yes, Abbott Laboratories dropping $23 billion on Exact Sciences.
I read the merger agreement last night. The synergies they're claiming are wild. The big one.
$1.14 trillion.
Just for North America.
Just in Q1, we have not seen a quarter like this since 2021. The bankers are finally buying new boats, Maya. The animal spirits are officially back.
Well, I hope they saved up for the legal fees, because the friction is way up right alongside the volume. I saw a survey this morning where 2/3 of analysts are bracing for a massive spike in M&A disputes this year. But sure, the headline number is huge, and the anchor tenant of this whole quarter is Abbott Laboratories dropping $23 billion on Exact Sciences.
$23 billion for the Cologuard people. I actually love this deal. It is a classic strategic bolt-on, just supersized. Abbott wants to dominate diagnostics, and Exact Sciences basically owns the non-invasive screening market. It is a perfect fit.
Perfect fit if you ignore the price tag. $23 billion is a massive premium for a company that is still burning cash to acquire customers. I read the investor presentation this morning. Abbott is projecting these absolutely wild synergy numbers in year 2. I just do not buy it. You do not magically integrate a specialized oncology sales force into a massive legacy medical device machine without breaking a few things.
Oh, come on, you are being too cynical.
I am being literate, Nate. The footnotes on their integration costs are doing a lot of heavy lifting.
Look, Abbott had to do this. You have to pay up for a moat, Cologuard is basically a verb now. People talk about boxing up their poop and mailing it through UPS like it is a totally normal Tuesday. That brand equity is incredibly hard to build. Abbott has the global distribution network. You plug Exact Sciences into that global pipe, and the revenue scales instantly.
I am not debating the product. I am debating the $23 billion. It feels exactly like 2021, all over again, where buyers just throw valuation models out the window because the debt markets are wide open. Corebridge and Equitable just did the exact same thing with their $22 billion merger. It is just deal fever.
Deal fever is how markets work. You have to strike when the geopolitical headwinds are actually somewhat priced in.
Wait, really? You think geopolitics are priced in right now?
For healthcare and life insurance, absolutely. They are domestic plays. And look, Abbott knows what they are doing. They are buying an annuity of recurring revenue. You turn 50, your doctor orders the box.
A literal box of, well,
Exactly. It is cash flow, consistent, predictable, demographic-driven cash flow.
okay, fine. I will concede the demographics, but I am circling year 2 on my calendar when they take a massive write-down on integration costs. I am playing this recording back to you.
I will gladly take that bet. But Abbott is not the only one writing massive checks right now. Google finally closed Wiz for $32 billion, and IBM just swallowed Confluent for $11 billion. The tech guys are shopping again.
Speaking of swallowing things, want to talk about the Nexstar courtroom drama? Because DirecTV just forced a judge to hit pause on their Tegna merger, and the legal filings are incredibly spicy. Voices.
So you read the consensus notes this morning, right? Every analyst desk is practically popping champagne. Strongest first quarter since 2021. $1.14 trillion in North American announcements alone. They're officially declaring the mega merger back from the dead.
I read them, Nate. I also read the legal forecasts, which are significantly less bubbly. You have 2/3 of surveyed analysts predicting a sharp rise in M&A disputes for 2026. Volume is up, but friction is way up.
Friction is just a byproduct of velocity, Maya. You get Abbott paying $23 billion for Exact Sciences or Corebridge and Equitable putting together $22 billion, you're going to get some sparks. That's just gravity.
It's not just gravity, it's structural pushback. Look at Nexstar. A judge literally just ordered them to hit pause on the Tegna merger because DirecTV is throwing a fit in court, or Glass Lewis urging shareholders to vote down Eldorado Gold buying foreign mining. The gatekeepers are awake.
Proxy advisors always want to justify their fees. Glass Lewis throwing a wrench is just a Tuesday. I'm telling you, the market is ignoring the friction because the strategic imperative to buy is simply too high right now.
Tell that to the takeovers panel. Regulatory watchers are explicitly warning that the panel is getting highly interventionist with schemes of arrangement this year. They're looking at the actual mechanics of these deals, not just the rosy press releases.
Okay, fair. The deal lawyers are definitely going to buy new boats this year. I'll give you that.
They always do. But if you think the regulatory headache is bad here, wait until we see what happens tomorrow.
Oh, you mean Blackstone circling senior in the UK?
That, plus Danone's pending billion-dollar buyout of Huel. And we'll see if Citi finally makes a move on a regional bank. We'll track all of those right after this. Spill the tea, as there are sesi.
So the word on the street, and this is coming from a few different desks, is that Citi is actively hunting for a regional bank.
Wait, really? Citi? With everything else they have going on, they want to buy a regional bank right now?
They need the deposit base. It makes perfect sense if you look at their balance sheet.
It makes zero sense. They have spent the last 3 years trying to simplify the business, shedding international retail, and now they want to strap a regional bank to their chest. I will believe that when I see the actual filing.
Fine, be a skeptic, but the deposit math works. Speaking of things not working, did you see the Nexstar and Tegna mess?
Oh, the injunction. Yes. A judge actually ordered Nexstar to hit pause on the merger because DirecTV is suing them.
It is glorious corporate theater. DirecTV is basically saying Nexstar is using this merger to hold them hostage on retransmission fees.
Which they absolutely are. I've read the complaint.
Hey, I am not saying they are innocent, but a full stop injunction? That is aggressive. Analysts are already projecting a massive spike in M&A disputes for 2026, and this is exactly what they mean.
I honestly think Nexstar walks away. The regulatory friction is just too high.
No way. They are too far in. They will settle with DirecTV, pay the ransom, and close it by the third quarter.
We should place a bet on that. Speaking of friction, proxy advisors are waking up. Glass Lewis just told Eldorado Gold shareholders to vote no on the foreign mining buyout.
I love when Glass Lewis throws a wrench into a mining deal. The pitch deck bankers on that one must be having a miserable week.
They probably are. But if you want to talk about bankers having a great week, Blackstone is apparently in late-stage talks to buy UK aerospace supplier Senior.
Oh, that is a classic private equity play. We need to look at exactly what Blackstone is seeing in the aerospace supply chain right now. Tomorrow's radar. So looking at tomorrow, I'm keeping both eyes on Blackstone. Word is they're in late-stage talks for Senior, the UK aerospace supplier.
Is there anything Blackstone isn't buying this quarter? They literally just bought a cricket franchise for $1.78 billion.
Hey, Royal Challengers Bengaluru is a premium asset. But seriously, aerospace makes way more sense for their current fund structure.
I completely disagree. The regulatory friction on UK aerospace right now is brutal. Analysts are projecting a massive spike in M&A disputes, and the takeovers panel is getting incredibly hands-on.
You just hate industrial deals.
I hate deals that get stuck in purgatory. Speaking of, we should get a regulatory update tomorrow on Danone's $1 billion buyout of Huel.
Huel, the official liquid lunch of first-year analysts everywhere,
Have you actually tasted it? It's like drinking wet drywall.
which perfectly prepares you for reading a 500-page merger agreement.
Fair point. We'll see if the regulators actually let Danone swallow it, or if they choke on the market share data. Catch you tomorrow.